A happy day for all of us, as Budget 2025 means a net reduction in personal income taxes for all. The FM has tabled a dream budget for personal income taxpayers, giving the much-awaited tax relief by rationalizing the tax slabs, widening really the tax slabs, and lowering the tax rates, which could actually mean an individual can save up to 143,000 rupees, depending of course on the level of income. The maximum amount of income exempt from tax has gone up from existing 3 lakh rupees to 4 lakh rupees. So the tax slabs are wider, from 6 slabs we've gone up to 7 slabs. The rates are kicking in at a different level of income. But the two notable changes I would want to call out is the incidence of tax is on income over 4 lakhs. That's when it first kicks in from the existing 3 lakhs. And the maximum rate of tax, 30%, kicks in on income over 24 lakhs. Of course, the biggest bonanza is for the low income earners, the middle class, wherein a taxpayer whose total taxable income up to INR 20 lakhs will have to pay no tax because of the significant enhancement in the tax rebate. So currently there is a tax rebate available which is on income up to 7 lakhs. So anyone who earns currently income up to 7 lakh rupees does not pay any tax. But remember, this has to be total income. So what is now proposed is, so if you get total income of 12 lakhs, there is no tax. For a salary taxpayer with an additional standard deduction of 75,000 rupees, this number actually goes up to 12.75 lakh. But remember, this doesn't apply to income that are taxable at special rates like capital gains. But for most, where the total income comprises of salary, rental, business income, interest income, they will get this rebate. This is for total income up to 12 lakhs or 12 lakh 75,000 in case of tax salary owners. For TCS, provisions applicable in specific transactions like remittances from India have also been rationalized. Now, the TCS threshold under the liberalized remittance scheme has been increased from 7 lakh rupees to 10 lakh rupees. This will mean a relief for all in terms of people going out for holidays, etc., spending for education, etc. is a better bonanza coming their way. So students who are studying overseas and have actually taken a loan from an institution to finance their education, the TCS has been totally removed. Currently, it is at 0.5% on remittances exceeding 7 lakh rupees for education purposes. So government has also rationalized the TDS provisions. Notable from a personal tax standpoint is the change in the threshold that's come in on interest income, which is increased from INR 50,000 to INR 100,000 rupees for senior citizens. The TDS will only come in if the total interest income is 100,000 rupees, which really makes it easy for senior citizens. At least it's a measure that will reduce compliance burden on senior citizens and simplify their life a bit. Then the updated tax return, if you've missed out on reporting any income, the time limit for filing an updated tax return has been generously increased from 2 years to 4 years from the end of the relevant assessment year. Of course, be mindful of the penalty that you have to pay if you're filing an updated tax return. Penalties in case of an updated return can actually vary from 25% to 70% of the additional tax and interest on the income that's been missed from reporting. So you pay additional tax, you pay interest, and then you pay penalty, which is, as I said, 25% to 70% of the additional tax and interest. Another measure towards simplification is the taxation of self-occupied house properties. So under the existing provisions, up to 2 self-occupied house properties are non-taxable. But they come with conditions that the property is occupied by the taxpayer or has not been occupied because the taxpayer's employment, business or profession is being carried out in another jurisdiction. These conditions have all been done away with. So simply 2 self-occupied house properties, 2 house properties may be considered as self-occupied and no conditions attached to it, and these may be claimed as non-taxable. There is no deemed income in the case of these self-occupied house properties. Now, the FM has also promised a new tax code for taxpayers which will be written in a simplified, easy to understand, clear manner for greater tax certainty, reduced litigation. So it's easy for both the taxpayers as well as the tax administrators. And finally on the budget, I think the budget is effectively use tax reforms as a tool for revival of the economy by putting in more personal disposable income in the hands of the people, by easing the burden of tax on taxpayers, namely the middle class, who are the key contributors as acknowledged in the budget speech today for India's growth by the Finance Minister.